coming off a Fed decision that sent stocks higher. US futures look as if they could go a little bit higher as well. Stocks could go higher once again. Does that make sense based on what we heard, based on the use of the transitory word from Jerome Powell? Mark, what do you make of the market reaction to the Fed?
I'm going to sound a little bit contradictory here, but I don't think it makes sense, and yet I think it continues. And what I want to explain by that is that the Fed sent a message that they were very concerned about growth. That was their big concern. And I don't think that should be a particularly reassuring message for stock markets, even though that's the yields are slightly lower. But I think that it's that idea that they didn't say that they were hawkish. They didn't say that they were more worried about the inflation impact, and they didn't kind of drive yields higher, has provided relief to a stock market that's been really sold down recently. And given that the data calendar is quite light into next week, I actually think that the next week will probably see US stocks continue to recover a bit of ground. This does not change the longer term fundamental story. We always said that the Fed would be a short-term trading thing for a few days. It wouldn't change the macro picture, and I expect that to be the case. The short-term impulse is lower yields, a steeper yield curve, and perhaps a little bit of relief rally for stocks.
Mark, are we just in a holding pattern until April the 2nd? I've had two conversations with market strategists this morning. Both are telling me, to your point, maybe about the short-termism that we're seeing in the market at the moment, that we're just waiting. We need to wait until April the 2nd, and then we get clarity, hopefully, and we can move on and price it from there.
I think you're kind of right. I'd phrase it a little bit differently. I don't think that we're waiting for April 2nd to give us a new direction. We're waiting for April 2nd to kind of tell us how bad it is. I don't think the underlying trades we've seen so far this year are going to change. Part of the reason I think this is such a wonderful year for macro is we're getting trending markets and very understandable trends and very tradable trends. I just think we're getting a bit of relief rally before then, a bit of consolidation. So in that sense, it'll feel like we're waiting till then, but that's not going to change the picture. And I also think people who are waiting for April 2nd to suddenly provide a new direction or clarity are going to be sorely disappointed, because we've already had very strong indications that, yes, while we'll know much more about what's going to happen on the trade side on April 2nd, it's not going to be the final date, because we know already that some of the tariffs will come in immediately, some will come in with a delay, there'll be some kind of review period for others. So yes, it'll just be another marker in the trade path, not the defining moment.
Yeah. The dollar rallied into the election stateside, Mark, and then it continued to rally into January. Sometime middle of January, it turned tail quite quickly, and we started to see a bit of a retreat in the dollar. I'm looking at the Bloomberg Dollar Index here. We're seeing a bit of a bounce in the dollar. Is that sustained? What do you make of the moves in the currency, which, of course, has such an impact on the rest of the world?
I think the dollar rallies from here might be a little bit tepid. Well, will be tepid. I think overall the dollar is in a long-term decline. Short-term we can bounce a little bit. As I said, there are some short-term dynamics. The longer-term dynamics are this is an expensive currency, and the world is structurally way too overexposed to the US. And that's the theme that we're going to see over the next couple of years. People decreasing their exposure to the US, and therefore we're going to see the dollar decline as they see those outflows come out of the country.